Good morning, everyone. This is Sage live from the 𝐊𝐶𝐿 studios, and you are watching the opening bell. Well, we have been witnessing inflation expectations in the market psychology carving out a different scenario altogether. On Thursday, the Australian benchmark index charged higher, comfortably reclaiming the 7,000 mark. Let us cast an eye over how the market charter is panning out today. Well, the ASX 200 opened higher today, backed by revival in the tech sector amid falls in Treasury yields. The Australian benchmark index is set to continue the winning streak today, extending the rally from the previous trading sessions on the back of upbeat domestic employment data and tracking a stronger Wall Street closing, buoyed by gains in technology stocks. The Nasdaq composite shot up by 1.77%, depicting a surge in demand for technology shares, and the Australian tech space is expected to mimic the same enthusiasm with tech giants such as Afterpay Limited, Zip-Co Limited and Xero Limited to remain in focus today. And moving on, the oil prices dropped more than 2% on concerns of increasing supply after diplomats said progress was made towards a deal to lift the US sanctions on Iran. And Brent crude fell 2.3% to close at $65 US a barrel, while the West Texas Intermediate crude ended the session down by 2.1% at $62 US a barrel. And Australian energy companies such as Oil Search Limited, Woodside Petroleum Limited and Santos Limited could continue their downward trend from the previous session. Then in the yellow metal space, gold traded close to a more than 4-month peak to hit on Wednesday, backed by a dip in the US Treasury yields and US dollar as investors shrugged off the Fed's hints on possible loosening up of economic support measures. The Australian gold miners such as Newcrest Mining Limited, Gold Resources, Ramelius Resources, Evolution Mining Limited and De Grey Mining Limited could trade higher today. And moving on again to the iron ore space. On Thursday, Chinese iron ore and steel futures led a sustained selling pressure across the nation's metals complex after the Chinese government sought stringent oversight of commodity markets to curb sky-high prices, sparking a broad-based correction. And September contracts of iron ore futures on the Dalian Commodity Exchange closed down by 5.7% at 1,142.50 yuan per tonne. Australian mining giants such as Rio Tinto, Fortescue Metals Group Limited and BHP Group Limited could trade with a downward bias in today's session. And on the other hand, prices of the metal used widely in power and construction, and this is copper, traded higher on Thursday as a softer dollar and worries about a strike in Chile spurred demand. However, plans by the top consumer, China, to manage the supply, demand and prices of commodities capped the gains. On the London Metal Exchange, or LME, the benchmark copper was up 0.5% at $10,056 a tonne at 1,558 GMT. Moving on now, let us have a glance at the US market performance overnight. Major stock indices around the globe closed higher on Thursday. The S&P 500 and Nasdaq composite climbed more than 1% each, led by a sharp rally in technology shares, while the US Treasury yields softened after a weaker than expected US business activity reading. And the Dow Jones rose 0.55%, while the S&P 500 gained 1.06%. Nasdaq Composite shot up by 1.77%. And market participants are still digesting minutes from the Fed's meeting last month, which revealed that several officials thought it might be appropriate to begin discussing a plan for adjusting the pace of asset purchases if the recovery holds up. The yield on benchmark 10-year Treasury notes fell to 1.628%, and the break-even rate on 5-year US Treasury inflation-protected securities, or TIPS, slid to 2.608%. Let us zoom our lens on the currency market. In the foreign exchange market, the dollar lost around 0.503%, hovering near multi-month lows, and the Australian dollar jumped 0.59% to 0.7771 on Thursday after Labor Force data depicted a faster than expected decline in unemployment in April 2021. The data revealed jobless rate had fallen to a one-year low of 5.5% compared to economists' forecast of 5.6%. Over to New Zealand, the dollar also rose 0.49% to 0.72 in the last session. Moving on now, let us look at the crypto charter that defined the broad sell-off across the world on Wednesday. Cryptocurrencies bounced back sharply on Thursday from their recent sharp drop, and the recovery in crypto space came after crypto backers such as ARK Invest's Cathie Wood indicated their support on Wednesday. Bitcoin was most recently up by 9% at US $40,090 after plummeting 54% below its all-time high, hit just over a month ago after some of its prominent backers reiterated their support. Concerns over tighter regulation in China around the cryptocurrencies pulled back by Elon Musk's support and unease over the extent of highly leveraged positions in the cryptocurrency space had caused this week's sharp sell-off. Similar rival Ether gained 13% to $2,767. On Wednesday, it fell 23%, its biggest one-day fall since March 2020. And this week, we saw Bitcoin, the world's largest cryptocurrency, dropping 30%, while Ethereum plunged 44% on Wednesday. And moving on now, let us look at the major newsmakers in the Australian share market today. Beginning with the top news comes in from Kogan.com, which said that it is seeing near-term supply chain inefficiencies and inventory planning challenges because of its rapid expansion. And Kogan said it has been progressively working towards optimising its inventory position to reflect current market conditions by increasing promotional activity, which has led to lower near-term gross margins and higher near-term marketing costs. As a result, Kogan expects underlying operating performance to be challenged in the near term and adjusted EBITDA for the 2021 financial year to differ from the current range of analyst forecasts. And next up is Australian gold producer Red 5 Limited said that it has lowered its production guidance for its Darlot gold mine due to unavailability of labour. The mining firm reduced its production guidance for financial year 2021 to 74,000 to 78,000 ounces, previously set at 80 to 85,000 ounces. And moving on again, APN Convenience Retail. REIT has acquired a portfolio of 6 properties in South Australia with On The Run, the flagship convenience store brand of ExxonMobil. And next provider of an online and mobile Marketplace, enabling users to outsource everyday tasks. Airtasker shares will be in a trading halt today as the company readies for announcements on capital raise and acquisitions. Let's now take a look at Oceania Healthcare, who's announced the EBITDA of 56.2 million Australian dollars for the 10-month period ended 31st March 2021, an 8% increase from the previous corresponding period. The sales volumes were 26% ahead of the prior corresponding period. And let's now move on to the last segment of our show. So, are there any economic events that can drive the overall market scenario going ahead today? Well, the retail sales numbers are due from the Australian Bureau of Statistics, or ABS, today, and the retail sales rose 1.4% in March as compared to February. Besides, manufacturing PMI data is also scheduled to be released today, and meanwhile the seasonally adjusted unemployment rate fell by 0.2 percentage points to 5.5% between March and April 2021. In addition, the trend of improving consumer confidence over the past 3 months was broken after Westpac consumer sentiment fell by 4.8% in May, and the data sets are expected to guide the movement of the Australian market to some extent today. On the global front, Japan, Eurozone, UK and US are scheduled to release their May PMI data today, and the other major global releases include Japan's April CPI, Eurozone's May's consumer confidence, UK's April retail sales and May's consumer sentiment, and US's April existing home sales data. Thanks so much for joining us. It's been an action-packed morning, that's for sure. That's all for now. Stay tuned for more live updates on 𝐊𝐿𝐼𝐴 TV across the economy, markets and sectors. And my colleague Holly will be back soon with some more news and a live interview. Sage signing off.